Okay, the final speaker before the question session, I'm pleased to say, is António Horta-Osório, the CEO of Lloyds. Antonio began his career at the Catholic University in Lisbon and then went to INSEAD. In fact, began as an associate professor, so started as an academic, then went to Goldman Sachs, Citibank, and Santander before arriving at Lloyds. So I think we're privileged to have someone with a particularly broad experience, both geographically in types of banking and of the banking scene as a whole. And he will now give his views on competition. Thanks.
Brand finance does significant work to put discipline and rigor behind assessing the value of brands, helping those in the boardrooms to see brands as strategically valuable assets. The interest shown in Brand Finance's Banking 500 illustrates how the discussion of brands has become a mainstream topic in boardrooms of the city. Brands are no longer the province of marketing alone. While I think having a financial value placed on brands is hugely useful to focus minds, I personally value brands as a driver of choice for the customer. And I see the value of the brands in Lloyds Banking Group in the context of the breadth of choice they open up for our customers. I want to talk to how brand value is built through offering products and solutions that meet real customer needs in a segmented way, and that through providing excellent customer service. And I want to address how a group brand can be used to set the rails the whole business runs on, the way each part of the group places customers at their heart. I think a group brand can speak to how we do business, and I think that this is every bit as important as what we do. It has perhaps taken too long for financial services to discuss the power of brands as drivers of customer choice. Branding has too often been a badge of ownership, more than an outward sign for the customer to identify a particular promise of service and a distinct way of addressing their needs. I'm glad to see the discussion mature to focus on customers and their choices. In my career, I have always looked to see what promise a brand is making for customers. In Portugal, when steering the integration of Banco Tota into the Santander Group, I saw the value of the personalized local service that the Tota brand represents. And so I kept the brand in the name of the merged bank. In Brazil, on the other hand, the first two banks we bought had small and complementary presences in São Paulo state, and therefore the scale benefits and the appeal of a foreign brand to Brazilians meant that the integration of the banks and the Santander brand made sense and would allow us to grow our presence as a single bank from that point in time. Also, when I merged Abbey National, Bradford Bingley, and Alliance and Leicester, the promise to the customer was built on the efficiency of Santander and the price competitiveness this enabled us to offer. Further, these three banks were ex-building societies with similar customer bases, which complemented each other geographically. So I believed it appropriate to use the promise of Santander. And now I am at Lloyds Banking Group. I see the value of choice for the customer in the breadth of brands in our portfolio, brands that include Halifax, Bank of Scotland, and Scottish Widows, in addition to Lloyds Bank. Each has quite different heritages and styles of relationship, as well as specialist services aligned to the customer bases that they serve. I believe giving customers at Lloyds Banking Group the ability to navigate choice is best done with a multi-brand strategy. It enables us to better serve our customers in a segmented and differentiated way, whilst integrating all central functions and systems enables us to achieve efficiencies and thus achieve lower costs than would otherwise not be possible, and share these cost savings with our customers. Perhaps it is not good for our place in the brand finance rankings, as it spreads the value of the group between different brands. but it is clearly good for our customers. 2013 has, of course, seen us return the TSB brand to the high street, offering local banking and another challenger on the high street. As you know, we'll soon have an IPO for TSB, in line with our obligations to the European Union. Already the TSB brand offers choice, a separate banking license, and a local agenda. Already the TSB is a signpost to customers of an approach, a set of beliefs, and a code of behaviors that they can select to match their own needs and their own preferences. I am immensely proud of the work done to not just split out a part of our customer book, but to create a meaningful and viable brand with a distinct customer promise. So the Lloyds Banking Group portfolio of brands truly is a fabulous business asset. The team at Brand Finance do not chart all of our portfolio, but for those they do analyze, they ascribe a value in excess of £13 billion. That is good to know, but I value our brands far more highly for what they mean to our customers. They mean something very central to the lives of our 30 million customers. Our brands offer a promise of service style. They set an expectation of behavior. Those expectations last far longer than the tenure of any one management team. That is why they must be nurtured and respected. This is a lesson that I hope everyone in our sector learns as we all seek to earn the trust of customers. If I reflect on the recent revitalization of the Lloyds Bank brand, it is the way we have made choice simpler to navigate that I think is key to its success. Now we have a simple architecture aimed to help our customers find their way, emphasizing the consistent delivery of a single promise to focus on delivering the things that really matter to our customers. The revitalizing of the brand has also brought an additional benefit that should not be overlooked. The work to rekindle the brand for customers has also recreated enormous energy and passion internally. The brand has become a driver for our own teams to deliver for customers. This is equally true in relation to our insurance brand, Scottish Widows. You will see the widow back on your TV screens after a 6-year absence, and younger, I would say. How a brand can work as a driver for internal engagement is a topic that deserves a session of its own, so I will move back to my primary topic. My presentation title includes reference to customer choice. I think it is worth dwelling on what this might truly mean. It is, after all, a much visited topic and one that politicians and commentators often talk about. Those commentaries seem to see choice as simply the number of banking groups on the stock exchange. For me, the answer is not more names to choose from, but better brands to choose from, each distinct and clear in what they offer. Brands should, above everything, create clear, distinctive and differentiated offers to customers to help them choose what suits them. Brands should provide customers with the choice of the form of service they want and the value they are seeking. Brands should provide customers with choice on the channels they want: branch, telephone, online, or mobile. Brands should provide customers with products that speak clearly to an identified need, that are described in a transparent way, that helps them make their choice with confidence. That, to me, is how to create real competition. I believe choice is vital to spur competition and to serve the customer. I am not, however, convinced that it is best achieved by fracturing the shareholding into ever smaller groupings, as you would increase customers to customers, especially at a time when the resources and scale to serve such choice require such a continual investment. And it is what I think Lloyds Banking Group does particularly well: a stable of differentiated brands that give real choice while delivering real value to customers by virtue of our greater efficiency. At Lloyds Banking Group, I'm fortunate to lead a group that derives its profits from retail and commercial activities focused on our customers. We do not do investment banking, where a brand can be pulled away from serving day-to-day customer needs. I recognize many other large groups have contradictory pressures on them, serving the retail customer or focus on the profits to be made in investment banking. The former providing the core role of a bank, in my opinion, to take and safeguard deposits and to make loans in a prudent way, allocating resources where they are most needed. In the run-up to the financial crisis, too often banks lost sight of good banking practices that had served them well and subordinated them to short-term gain. Bloated cost structures had to be balanced by driving revenue through complex products, with staff incentivized to sell these in volume. I have made our group address the costs of our operations, so we now have the high efficiency that allows us to better focus on serving customer needs. As a result of that drive, we now have the lowest cost-to-income ratio of any of the high street banks. So our group is never torn between investment banking activities and what is best for retail and commercial customers. Nor is it torn between serving the customers and serving our shareholders. Simply put, we have a business model which consists of being a simple, low-risk, low-cost, UK-focused retail and commercial bank. When we pledge ourselves to operating in a transparent manner for the benefit of the UK as a whole, we are not forced to change the manner we earn our profits or deploy our resources. We already have a bank wholly focused on helping Britain prosper, which in turn will also be the best for Lloyds shareholders, given our strategy and business model. Clearly, we are embarked on regaining trust in our group. For me, reestablishing trust means re-establishing what we stand for and refocusing on our underlying purpose or provenance, if you will. Preparing for today, I have reflected on the origin of brands. Brands began as marquees, burnt into the hides of cattle to tell people which farm the animal came from. If you knew the origin of the livestock, then you knew where the meat supplied came from, the conditions it was raised under, the food it ate. And then the brand did not just tell you who owned it, but it spoke of provenance. It told the consumer what to expect of the quality. It acted as reassurance and as a basis to trust that the customer's money was well spent in buying that meat. Provenance is a very important thing to see in a brand today. The reassurance that when you buy a product from a particular brand, you can trust it. And that in turn led me to believe of what provenance I want customers to see from all the brands in the Lloyds Banking Group portfolio. I have talked about the customer-facing brands of Lloyds Banking Group, but not yet about the group brand itself. For many, the group brand is simply for analysts and investors. It is not expected to speak to the customer, but I think a group brand should add to the provenance of all the brands within it. It should speak to the customer and tell them that any brand it owns will be run to the customer's benefit. It should say there are principles and behaviors that will always be upheld. Lloyds Banking Group has a model that is unique among the larger banking groups. So I have a unique opportunity to pledge the group to a core purpose of helping Britain prosper and a unique platform to make that promise credible. Given the scale of the group, serving 30 million customers, making that promise credible can and will make a very real difference to the communities we serve. So today I promise that every brand of our portfolio will always use its knowledge to help customers prosper and to help customers achieve their goals. Every brand in our portfolio will create products and services to meet real customer needs. I believe the industry should never again launch a product without tangible customer benefit. And in Lloyds Banking Group, I will make that belief a reality. We are not perfect, but when we make a mistake today or uncover any mistake of the past, we'll fix it in the customer's interest and fix it quickly. Every brand in our portfolio will stand behind these promises, and every business leader in our group will be expected to deliver on these promises for the households we serve, for the businesses we support, and for communities we have the privilege to be part of. I know these sound like fine words, but what will that mean in practice? To allow people to measure our progress to helping Britain prosper, we will shortly be launching the Lloyds Banking Group Prosper Plan. The aim is to provide a set of commitments that can be measured and monitored, focus on the areas where we can make the biggest difference and where we have the power to influence the most change for the benefit of our customers and the UK as a whole. Our Prosper Plan addresses directly the issues our customers face, such as struggling to buy a first home or finding a job, living in or running businesses in disadvantaged areas, facing financial difficulties, or coping with disabilities. These are commitments that support the community in which we operate, linking our success directly to the success of those communities. As I have said many times, a healthy banking sector needs a healthy economy, and a healthy economy needs a healthy banking system. That's why they are inextricably linked. Our Prosper Plan will be formally launched with our annual report in March. But given all I have said here about establishing credible choice, I want to commit to 3 measures today. The first is to help more than 80,000 customers to buy their first home this year. More than any other country that I know, home ownership is central to the UK culture. Owning a home is fundamental to a sense of prosperity for families and in turn to creating strong, interdependent communities. Second is to continue to grow our lending to SMEs. In 2014, we have committed to increase our lending to SMEs by over £1 billion on a net basis, building on what we have been doing over the last 3 years. This means we will be growing our book by at least 5% at a time when the market overall is shrinking. This will ensure that companies have access to funds to grow and can increase employment. And third is to lead our industry to better representing the diversity of our customer base and our communities. We have committed to having 40% of senior roles filled by women by 2020. These are just the first 3 of our commitments. The plan will develop and grow in discussion with the people who speak for households, businesses, and communities. The plan will be a measure of how the business model of Lloyds Banking Group enables choice for the customer and how our brands deliver the choice in the marketplace. The plan will drive us to make best use of our unique business model to focus on Britain's needs and Britain's prosperity. And bringing us back to the subject of brands, every brand in our portfolio will continue to remain distinct, offering customers the particular style and specialism that allows the customer to navigate and make their choices. Every brand in the group will, together, work to help Britain prosper. Thank you.